For more on this tale of two cities, we are joined by Arthur Levitt, former SEC chairman, current advisor to Goldman Sachs, and a board member here at Bloomberg. Arthur, it's a very provocative comparison. You've got London dealing with their big bank issue one way, and the U.S. dealing with our big bank issue another way. You've sat in the regulator's chair before. You've been chairman of the SEC. Who's doing a better job?
Well, I think deceptively, it looks like London's doing a better job. But we're in a globalized electronic market, and the imbalance cannot keep up. If London sees that U.S. regulation is easier, softer than their regulation, they're going to change because they don't want to lose their business to the United States.
Well, but right. During over the course of the past decade, what actually happened was U.S. regulation was stiffer, and London actually watered it down even more.
I think we're going to hear lots of conversation from the UK, from the EU. But when it all washes out, I don't think that that regulation will be any more rigorous than our own. Clearly, the influence of lobbying, the banking influence in the United States, and the difference in the party structure makes it less likely that we're going to have the kind of strong regulation that's being called for in London. And we also have the rise in the market is inversely proportional to the level of regulatory rigor we're going to see.
Arthur, with some of our guests, we've heard to the UK as being referred to the sick man of Europe. I mean, do the regulations in the UK need to be stronger than here? They have a higher proportion. Finance represents a higher proportion of GDP than in the US.
I think they do need to be. Clearly, the banks have a much greater influence in terms of their overall economy than the banks in the U.S. And clearly their history of regulatory rigor has been very weak. The FSA has recast itself recently and is going to become a very strong regulator. The eyes of U.S. investors and U.S. regulators are going to be focused on what's done in the rest of the world. But clearly, we're not going to be quite as strong as we see coming out of the UK.
Arthur, you described what the UK is doing as deceptively ahead of what's going on here. But to the eyes of the taxpayer, they're actually taking firm action. They're reining in bonuses of these firms that were, in fact, they're eliminating these firms that were bailed out by the UK government. And here we still see the situation of too big to fail banks. With about 30 seconds to go, and I know it's not a lot, how do we deal with that? It's still such a vexing problem.
I think they'll find, just as we found, that reining in compensation is something you simply cannot do. There are too many ways around it. There, where we were 10 years ago, I think that all of us will see jawboning is the only way to control compensation. There won't be much difference, I predict, between U.S. regulation and UK regulation when this whole thing washes out.
All right, Arthur, thank you for joining us. It's Arthur Levitt, the former chairman of the SEC, current advisor to Goldman Sachs, and a board member here at Bloomberg.